Hello, everybody. Happy Tuesday to everyone. John, Sandon, Pat, Harris, and Pat especially. I saw you guys in the waiting room waiting to get in here today. I love it. I love it. All right. This is all good stuff here, guys. Market is, it's not as busy as I thought it was going to be yet this week, but we do have the big guys coming out today, tomorrow, Thursday ahead of that jobs number. So we've got Apple and Amazon and Meta and Alphabet all coming out this week. So I would expect things to really, really pick up quickly here. Wish you could see my background right now. I know this is the S&P 500 pit here. But boy, oh boy, it just started a blizzard where I am at right now. So this is awesome. I cannot wait for this. It's about time. Anyway, let's get to the market here. S&Ps were down overnight. They were down to start the day. They, saw them down about 25 points. Right now, they're up about 15 points. So the Dow is, the Dow is back to almost unchanged on the day, and the NASDAQ here is actually up 120 points or so. Before we get into, before we get into our topic and a continuation of yesterday and the gamma that we talked about yesterday, got to show you guys something here. Boy, this is something. Look at DJT. Okay? Look at DJT. So it's halted trading a bunch of times today for volatility. Stock is trading currently 52.5 or so. What is the expected move for next week? Thank you, William. What is the expected move for next week? Anybody? $30. Bobby, there you go. Excuse me. Yeah, a little over $30. Now, you've got a stock trading $52. So we have an expected move. Okay, let's go 31. Let's split the difference. We've got an expected move for next week for a company that has no revenues, no income, of 60%, all because of the election. And I'm not so sure that if Trump wins, and again, this is not political, that if Trump wins, that DJT is actually going to go up. Because they have literally, they're talking about short squeezes right now on CNBC, guys, in DJT, that there's a short squeeze going on right now. Just what we talked about yesterday. Dom Chu, you should have listened into us yesterday. Okay, but this is just incredibly, incredibly insane. So, as those of you know that are in my trading room, we actually have a position out there. There were a couple fills, not a ton quite yet. There are a couple fills to sell, nice, Robert, to sell this iron condor, to sell this volatility for next week. Okay, we are trying to sell this at $3.75. So as a quick review, if we sell this or other people are able to sell it, the break-evens for this at the end of next week would be $63.75 down to $26.25. That would be the range for the end of next week, election week, for this thing to break even. going to happen? I don't know. But there's a lot of volatility there to take advantage of. And as always, this is a position, it may seem risky to everybody, right? But as always, we put our positions out there with 100% risk identity. We know exactly what our risk is going into any trade. So there's never any surprises, never any blowout risk, anything like that. Does everybody understand that? Boy, looks like the rally's picking up some steam here. Yeah, S&Ps are trading near their high of the day right now. Okay. How far is the squeeze going to go? You need a crystal ball, Jay. Well, you know what? Before we go into what we wanted to go into, let's look at where some of those out of the money options are at, okay, on the upside. And if we look for this week, okay, look right in here. I would look especially right here to the 60 line, where you can see there's over 32,000 of those. You've got 11,000 of the 95s that are open for this week, open interest this week. Let's look to next week, because that's really the big one, because this stock is moving pre-election here. Again, it's really kind of how we equate MSTR and Coinbase to what Bitcoin is doing. This stock is really moving on the perception of Trump winning the election. Again, even if he wins, this could absolutely, in my opinion, be a buy the rumor, sell the news type of event. And it's really, to me, unbelievable as I scroll through here at the open interest, that it's all, the big open interest and the squeeze that we're seeing, the gamma squeeze, is because of all of the options that are open this week. Remember, what did we talk about gamma yesterday? What options have the most gamma to them? Which ones? We literally talked about this yesterday. Which options have the most gamma? Where does that squeeze come in? No, Robert, it's not the farthest out. It's the closest expiration. At the money and nearest term. At the money and nearest term. Well, if we look here, okay, at the money nearest term this week. And again, I'm pretty surprised that the big open interest is for this week and not next. I would bet in the next couple of days, we get some really big rolling of the positions. Because, again, next week, that's really kind of like an earnings report. Okay, so let me put this up here, guys. Let me put this up here just as a quick review on the gamma. All right, let's get this up here. And how do I get this full screen here? There we go. Okay, gamma is highest for at the money options, moves lower as options move further out in the money or out of the money. Gamma is also highest for at the money options closer to expiration. Okay? So this is a review right here of yesterday. Okay, this first slide for today, this is just a review from yesterday. Now, what I really want to talk about today is how do market makers, traders, like, what I did on the floor and what these guys behind me are doing and what all, market makers are doing, how do they hedge their delta portfolio? Because again, we know that gamma, measures the increase or decrease in an option's delta when the stock moves by a buck. Delta is not just stuck in the ground. It's static, Delta of an option changes as a stock moves. So how do market makers hedge their positions to make sure that they are what we call flat? Flat meaning delta neutral. When I traded on the floor, I literally was one of the largest traders on the floor. Not because of my size, definitely not. But trade the most contracts, most volume. But I was always delta neutral. I was always hedged positionally. So how do market makers hedge their option positions? Well, you can buy or sell stock. You can use deep in the money options, instead of buying or selling stock. But if you have that back spread position, remember we talked about that back spread position yesterday? That's a position where you own typically volatility and you have positive gamma. So your back spread position looks like this. Remember the smiley curve here, guys? The smiley curve is when you have positive gamma. The smiley curve means that your deltas, increase to the downside. So you get shorter delta to the downside when the stock is going down. And on the upside, you get longer delta on the upside. That is a back spread. That means when you own gamma, when you have positive gamma, you want the stock to move. As you can see in the P&L on the bottom line here. Look at the bottom line on this graph, and I'm going to explain this here in a second. What if the stock doesn't move? That's where we get hurt. So if we own gamma, we need the stock to move. Does everybody understand that for right now? Because I'm going to go back a slide or two and we're going to look at how we hedge a delta position. Excellent. Now, before we do that, guys, word of the day. Word of the day, let's get it up there. I'll leave this up here for about 30 seconds. Back spread is the word of the day. TJ, large open interest is irrelevant. It's what's in my position. It doesn't matter what anybody else in the world has as a position. It's what's in my position determines my gamma. All right, let's get Groucho off of here. Let's take a look at a position. This is a position that I just created. Now, this would be typical of what a market maker trading NVIDIA might have on. Remember, when we're trading here, guys, when we put our positions out there, we have one position, a call spread, a put spread, a butterfly, whatever it is, right? So literally one or two, maybe three options on in a position. But market makers who are actually trading a particular stock or the index or whatever it is, they're going to have thousands of options on in their position, all with different strikes, different expirations, and everything kind of goes into the mix to create the position. So what I have done here is just created an imaginary NVIDIA position that a market maker might have. Okay, and on this screen right here, and yes, we'll post up a link so you can get a copy of this entire thing here. On this position right here, the cumulative delta is right here. So basically long 600 deltas to start. Okay, now I got a question for everybody. NVIDIA right now is trading, I want to say it's trading like 141 and a half, 142, somewhere right in there, right now, live as we're speaking. Okay, looking at this position and understanding, knowing what we have spoken about, gamma, okay, in terms of where gamma comes from, what options have highest gamma. Before I flip to the next screen here, looking at this position, at the strikes, the quantities, do you think this position has positive or negative gamma? Do you think it has positive or negative gamma? Still got a lot of back spreads coming in here. What do you guys think? Okay, Motown guy says negative. Come on, let's get some other answers here. Don't worry. Whatever you say is good. I just want to get your brains thinking here. Okay, we got a lot of both answers here. That's great. Got a bunch of positives, a bunch of negatives. So let me ask you again, which options have the most gamma to them? Robert, just because delta is positive does not mean gamma is positive. Okay, there's really no relationship there. Okay, there's no relationship there. So which options have the highest gamma? Remember, at the money, closest to expiration. Which option on this list here is the largest position, and largest position by a lot in the portfolio? That's these 142 strike call options. Right at the money, close expiration. Anybody else have me frozen, or is it just Pat? How's the stream coming through to everybody else? Okay, maybe while I'm waiting for those answers, I'm going to take a little spoonful of my acai bowl. Okay, Pat, just you. Okay. Back to the position here. Does everybody see the largest part of the position is an at the money option? Okay, remember, gamma comes from either a call or a put at a particular strike. If you're long that option, you're going to be long gamma. Okay, now, if it's a call, you're also going to be long delta. But if it's a put, you're going to be short delta. But if you own the option, you're going to be long gamma. If you're short the option, you're going to be short gamma. So if I took a quick glance at this overall position here, my first guesstimate would be positive gamma, because the biggest position I have here are these at the money options. Does that make sense to everyone? Okay, don't worry about the delta here. Don't worry about the long 600 deltas yet. Does that make sense? Okay, how do we hedge that? How do market makers hedge that? Here is the risk portfolio to this position. You can see, as we talked about earlier, we've got that smiley curve. We've got that back spread. If you see a P&L graph like that, that means there is positive gamma. Okay? That means we get shorter delta on the way down. We get longer delta on the way up. Now, let's take a look at that. Here is where the stock was. Okay, and there is that long, almost 600 deltas that we talked about. Okay, look at the delta line, and we can see that as the stock goes down, the negative delta increases. And as the stock goes up, the positive delta increases. That means we have positive gamma, which we can see right from here. We can look and see this positive gamma right in here. Okay, is everybody with me? Is everybody with me? Before I move on to show you how market makers hedge a position. Okay. Great. Now, if I want to be flat, that is exactly right, Robert. If we had the front spread and our graph looked like this instead, we would have negative gamma. That is correct. Okay, now, if I have positive gamma, I want the stock to move. If it sits still, we're going to take our losses. Why do we take our losses if the stock sits still? Because the options we own have theta decay to them, right? They lose money over time. So somehow, we've got to make up for that. We've got to somehow hedge our position and make up the amount that we are going to lose daily on theta, on decay. And we can also see on this chart, when you have positive gamma, you also are going to have decay. That's our theta. And you can see right here at the money, in this position, the time decay on this position is going to cost us about $800 a day. Does everybody see that? That's what the theta from the entire position is going to cost us, $800 a day. Somehow, we got to make that up. If I'm a trader with this position, I got to make that up. How do we make that up? With movement in the stock. How do we capitalize on that? Okay. And Bobby, you may say this is ouch. Okay. This is going back a while, but I've had positions trading on the floor with $50,000 a day of theta. And so you better believe if you have positions like that, you need stock movement. You need to be able to scalp the stock. What do I mean by that? Okay, let's say we're starting here, okay, unchanged here with our 600 deltas. What if the stock goes up to 149? Okay, if the stock goes up to 149, serious, there's no manipulating. Okay, I'm not even going to answer that. There's no manipulating. There's zero manipulating. So let's get back to this. If the stock goes up to 149, what happens to my delta position? I now, because of my positive gamma, which means that my deltas have changed, I'm now long 1,300 and change deltas. So if I want to then be delta neutral, meaning I take off my position movement risk, what do? I could sell 1,300 shares of stock. If I do that, my delta's down to 0. Okay, does everybody follow that? My option delta is still about 1,300, but now I've got a stock position that is negative 1,300. So my delta position is now flat or 0. Does everybody understand that? Excellent. Okay, before I move on here, guys, last chance. Last chance if you're not already in for the wheel. Okay? Back spread, word of the day. Okay, back to our explanation. So at 149, we're now flat 0 delta. How do I make money with that? Well, what if the stock then goes back down to where we were? Okay, what if the stock goes back down to where we were? Remember, up here, I'm now 0 delta because I had sold 1,300 shares of stock at 149. So let's say the stock goes back to 141 right here. Okay, what would my actual delta be here at 141 if I had sold that stock as it moved higher? What would the new delta be back down there? Okay, Robert, I'm going to buy back some of it. I may not buy back all of it because if I want to remain delta neutral, how much would I want to buy back at that point? Bingo, Don. Excellent. If I was long, and again, I'm rounding off here, 600 deltas, but I've sold 1,300, I am really short 700 deltas. I could buy back 700 shares of stock at that point and be back to delta neutral again. Okay, now what's the P&L on that? Well, if I sold 1,300 at 149, I buy 700 of that back at 141. That means 700 shares times $8. I have now scalped, this is called scalping, $5,600 in stock. I've made a profit trading stock around my option position. That $5,600 obviously more than makes up for that $800 of theta decay that we were talking about. Does that make sense? Okay, now I'm obviously simplifying it a little bit here, but this is what we do. This is what we do. And in fact, what I'm going to do, I don't know if I'll have it ready for tomorrow, but at a subsequent live stream as a follow-up to this, I'm a pack rat. I literally have all of my trading sheets from 30 plus years ago that show all my transactions on a particular day. I'm going to pull a few of those out so I can literally show to you the amount of stock that I would potentially trade in a day just to balance out against my being delta neutral, and scalping against my theta. Literally, sometimes it would be hundreds of thousands of shares of stock in a day. Robert, as a retail trader, like what we're doing on the screens, okay, yeah, it can require a lot of maintenance. But as a market maker, when you're doing this, your eyes are closed, you could do it in your sleep. It's really not. It's just, it's part of our job. But also, the reason you need to know this, especially if, you have positions on, is because you need to understand the dynamics of your position. Okay? Sirius, I'm not sure what you mean. The purchase of the underlying asset results in price movements. Not sure what that really means. I'm sorry. We can certainly follow up and have a conversation offline about that. Okay. So what I really wanted to bring up to you here is in a backspread position, like we just went through, you have got to have movement in the stock to be able to scalp enough to make up for that theta. And the opposite holds true. If you have, as Robert had asked before, that front spread position or an opposite position to this where your graph looks like this. If I can get my drawing tool going, that would be great. There we go. Okay. Now my highest P&L is up here, right where the stock is. What do I want? I don't want the stock to move. Why is that? What gave me, guys, the smile, the back spread? Do you remember which options we looked at to give me that positive gamma? That was these at the money long options, ones that I own, right? That's what we talked about, gave me that positive gamma curve because that option has the most gamma. You guys remember that? Okay, what if the position was flipped? What if instead of owning these, okay, what if I was actually short 41 contracts of those? That would flip over my gamma and turn this into a negative gamma position. Where do we always say we want the stock to go? To the short strike. To the short strike. Well, if my position was flipped and I had negative gamma, okay, where is the short strike? It is right here. And look at that. That's where the highest P&L would be. Does that make sense to everybody? Does that make sense to everybody? Awesome. Okay, hopefully this shed a little light on how market makers hedge their positions. And in fact, what I'm going to do, I will be back in Chicago next week, back down on the floor. We'll be doing these live from the floor. I'm going to pull in one of the market makers from the S&P 500 pit and just have him kind of talk how he hedges his position. Now, If he's trading S&P 500 options, he's hedging with S&P futures, rather than buying or selling a stock position like we were just looking at in NVIDIA. He's hedging with S&P 500 futures. All right, guys. Yeah, the wheel's loaded up today. The wheel is loaded up. Let's get that drum roll going. There we go. There we go. Who is it going to be? Looking to me like it could be Scott Schaefer or Kay Kibler, who I think is a newcomer. Kay Kibler. First time I've seen you in here. Maybe it's not. I appreciate you being here very much. That is awesome. Are you still here, Kay Kibler? Because remember, you gotta be here to win. Kay Kibler, are you still here? I'm going to give you 5 seconds. Yes, R. Will, please hit the like. Absolutely. Smash that like button. Uh-oh. Uh-oh. Kay Kibler. Kay Kibler. 5, 4, 3, 2, 1. Kay. Oh, literally at the buzzer. Kay Kibler steps up and says that you are here. Nicely done, Kay. 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 And I'm not sure what your first name is, but I'm going to call you Kay here. Make sure you send me an email. Send me an email to this email address right here, prosperswag@prospertrading.com. Send that today because there's going to be a bunch of swag getting sent out this afternoon. All right, everybody. Again, let me post up if you want the presentation here. Let me post up the link to that. That is right here. So you can use that link. All right, everybody. Appreciate you all. Smash that like button. Let's keep growing this thing. Will the market maker sell 1,300 shares? Well, Steve, if you were talking about back if the stock were to go up here and that delta position was 1,300, to hedge the position and get it back to a delta neutral or flat position, thank you, Leif, then yes, the market maker would sell 1,300 shares of NVIDIA. At that point, that would equalize the delta, bring it back to zero. Does that help you out there, Steve? Jay, to enter the wheel game, all you have to do is put the magic word of the day in the chat, and you're in. Today it was back spread. Thanks, Motown. Whether market movers sell 1,300. Steve M. Steve, can you hear me? I've answered that. Steve M., if you can hear me, please let me know. Okay, don't forget to shoot me an email. You as well, Bobby. Steve M., come on, are you here? Are you here? The risk profile graph, K, for this was all in that link that I just posted up here. This entire presentation is in this link that I had posted up, that I'm posting up again right now. All right, Steve M., I guess you're out. You are no longer here. Everybody, have an amazing, amazing day. If you're a Dodger fan, you got to be sitting really, really happy right now. If you're a Yankee fan, best of luck to you. Have a great night, everybody.